balance, if you are in a business that you understand and you think it's a really outstanding business, that the presumption should be that you just hold it and don't worry. And if it goes down 25% in price or 30% in price, if you have more money available, buy more. And if you don't, so what? Just look at the business and judge how it's doing.
Thanks once again for joining us on Teslafaninsight. This is Greg. Today we're diving into something that might surprise you: Warren Buffett's connection to Tesla. If this is your first time on the channel, welcome to the community. If you're a repeat visitor, please take a moment to hit the like button and subscribe. It really helps us grow. And if you're feeling generous, our Patreon support is incredibly helpful for our forward progress. Today we're covering 5 key points about Warren Buffett and Tesla across 4 segments of about 4 minutes each, followed by our usual health tips. Let's jump in. Segment 1, the Munger-Buffett Tesla stance. As you probably know, Charles Munger and Warren Buffett made it crystal clear they would never invest in Tesla, and honestly, it's easy to see why. Elon's management style, the rapid decision-making, the Twitter controversies, the move fast and break things approach, it's the complete opposite of how Buffett prefers to invest. Buffett likes predictable, stable businesses with moats. Think Coca-Cola, not rocket ships to Mars. Munger was particularly vocal about this. He saw Tesla as speculative, unpredictable, and frankly, not their kind of investment. They built their fortune on businesses they could understand and predict for decades. But here's where it gets interesting and why we're talking about this today. Sometimes the market has other plans, even for Warren Buffett. The index fund backdoor, segment 2. So how did Warren end up investing in Tesla? 2 words: index funds. About a month before the Trump administration started, Buffett made an announcement that caught many people off guard. He decided to liquidate his holding in Vanguard's S&P 500 fund, and he also liquidated a State Street fund that was also targeting the S&P 500. Now you might be thinking, wait a minute, how is Warren Buffett investing in index funds when his portfolio of stocks is basically already an index fund? I mean, Berkshire Hathaway owns Coca-Cola, Apple, they own See's Candies outright, Geico Insurance, Dairy Queen. They've got their massive diversified portfolio. The key difference is control and fees. When you own individual stocks, you're making the decisions. When you own an index funds, you're along for the ride with whatever the S&P committee decides. But here's the kicker. He did save money on S&P ownership fees by going direct. The irony, by owning S&P through an index fund, Buffett was technically a Tesla investor, even if he never intended to be. Segment 3, Tesla S&P weight and Buffett's exposure. Here's the math that matters. Tesla represents 1% of the S&P 500 based on its current market cap. So this isn't a direct ownership stake in Tesla, it's tangential, almost accidental. But think about it, when Tesla's stock price moves up, Buffett's index fund holdings move up too. He's making money on Tesla's growth, whether he likes it or not. That's the beauty of the curse of index investing. For a man who built his career on picking individual winners, having exposure to a company he fundamentally disagreed with must have been interesting. Every time Tesla hit a new high, Buffett's portfolio got a tiny boost from a company he thought was overvalued. This is actually a perfect example of how modern investing works. You can't always avoid exposure to companies you don't believe in, even if you want broad market exposure. Segment 4, the cash mountain strategy. Now, why are we highlighting Buffett's Tesla connection today? Because of the cash, massive amounts of cash. As we covered in our earlier shows, Warren Buffett assembled a cash pile of at least $300 billion before the Trump administration began. Think about that number, $300 billion sitting on the sidelines. Heading into what he saw as an uncertain and likely difficult period, he chose to move heavily towards cash, and you know what? It was probably smart. He saved his investors from potential headaches. But here's what's fascinating. Buffett creates waves. There are money managers whose entire strategy is mimic him to show Buffett-like stability in their portfolios. When he moves to cash, others follow. We're potentially talking about $1 trillion of investment capital sitting on the sidelines. The big question now, we have reached the point where coast is clear, where all this money can re-enter the market. I would have said yes a few weeks ago, but now we have this new challenge, the potential impact of changes to Fed Chair Powell's position. The idea of lowering interest rates below inflation levels might feel good short term, but it's dangerous territory. It's one reason why the dollar's value is falling globally. Here's what's interesting about market crashes. They can reach a point when there's no dry powder left to fuel stock growth. With Buffett mostly out, we have a signal that we're not in an overheating zone yet. But looking at recent performances, Nvidia, Tesla, Apple, Meta, all doing incredibly well, it looks like most people are back in the market. The question is, will that include Warren Buffett? This ends our sort of auto segment for the day. We'll now go into our health tips. Tip number 1, digital eye rest. If you're watching a lot of market analysis like this, remember the 20-20-20 rule. Every 20 minutes, look at something 20 feet away for 20 seconds. Your eyes will thank you. Tip number 2, investment stress management. Whether you're following Tesla stock or trying to understand Buffett's move, financial stress is real. Take 5 minutes today for deep breathing exercises. Your portfolio decisions will be clearer with a calm mind. Tip number 3, stay hydrated. Markets are volatile, but your water intake shouldn't be. Aim for 8 glasses today, especially if you're spending time analyzing charts and numbers. That's a wrap for today. Deep dive into Warren Buffett's unexpected Tesla connection. What do you think? Will Buffett's cash mountain start flowing back into the market? Will Tesla benefit from that potential influx? Drop your thoughts in the comments below. If this analysis helped you understand the bigger picture, smash the like button and subscribe for more Tesla and market insights. And remember, if you want to support our research and help us bring you more content like this, check out our Patreon link in the description. Thanks for watching Teslafaninsight. We'll see you on the next one. Tschüss, au revoir, Heath Road, Hoda Hafez Drasiche, Ni Homa, Namaste, Arrivederci. And in Jamaica we say, enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.